comes to part B, we have been told to do a journal entry. So when you do the journal entry, then that's where a picture changes a little bit. So in this case, so what we have to do for an allowance account, and this is different from the sales account, the other method that I've talked about in the class, which I'm not covering here, which you should also prepare for the final exam. So here in the allowance account, we have to also worry what is already sitting in the allowance for doubtful accounts allowance for doubtful accounts uh, in the debit on the debit or credit side. What is there already? So if you notice it in the exam, in the question, it says there is a 3,600 credit sitting here, right? We don't know whatever the eventually, whatever there was, the final balance and the allowance for doubtful account is a credit sitting as 3,600. So this information has been given. So remember, I was telling you that this 11,820, if you take that out, and the net will be 558,180, and I said that's what we want to see here in the balance sheet, 558,000, right? 1,700, whatever that number is, right here, right? This is what we should see. And I'm taking out 11,820. So that's right. That's exactly right. But for the journal entry, when we book that entry, we already, since we already have 3,600, we have to net that amount. So 11,820, and we gotta take out 3,600 from it to get the final balance of 8,220. That's what we're gonna get. Now that's what we need to book the journal entry, so that your journal entry will be bad debt expense. Okay, so that's your bad debt expense. First thing, 8,220. Expenses are always debit, and allowance for doubtful accounts is 8,220. What this is gonna do is it's gonna add on your T account 8,220 on your credit side, and finally you will see 11,000 your 820, right? 11,820 as a final credit balance. That's exactly what you want to have, so that on the balance sheet your this is 11,820, and and your final net accounts receivable will be 558,700, whatever that number is, and net number. So we have to take care of this in the allowance for doubtful accounts, especially. It's something we have to worry about. The other thing I want to quickly talk about is that for the journal entry, so we are, first thing we book is bad debt expense. Remember, expenses are part of the earning process. This is, I'm saying, right from the first 4 or 5 chapters, right? So we are showing this as an expense of the period when we did the sale. So in this entry, this is an accrual entry, basically does that. It puts the right expense, because that expense is part of the selling, right? If you make money, you have to take this risk of selling it sometime to the customers who may not be able to pay you. So because it's part of the business, that's why it's called bad debt expense. It's part of your earning process. You have to take the risk, otherwise you won't make money, right? A company cannot make money if they don't take risk. So this is this expense is debit, right? And the allowance for doubtful accounts, which is a contra account, it reduces your accounts receivable, just like we saw in the balance sheet. This reduces your accounts receivable to a net amount, right? You've seen that many times now.